Recently, ARK Invest's CEO Cathie Wood has come out with some bold stock predictions for Tesla, which is their largest position in their investment funds. Today I'll take a look at some of these predictions as well as the arguments she gives for the Tesla extreme bull case to see if they're accurate or merely pie in the sky. As if Tesla isn't already pie in the sky, so stay tuned. Hi everybody, welcome back to The Contrarian. My name's Logan. I really like to talk about overall success, investing, as well as going against crowd thinking. I think Tesla is a good example of kind of the insanity that crowds can pump into a market. I think this is a good example of this right now. But I will say a disclaimer right now that I'm not wanting you to take any of what I say as investment advice. This is just a YouTuber talking about my personal opinions and interpretations of a company. So, why would you ever listen to a YouTuber anyway, to begin with? First of all, I want to make it clear, I was actually a Tesla bull up until recently. I just saw it as a good opportunistic investment to be in. However, I personally don't think the current valuation is justified, but I will give you both sides of the argument. And right now, I just see so much nonsense being spouted about Tesla's stock since its parabolic moves. Just search Tesla stock on YouTube to see what I mean. Tesla's biggest Wall Street bull thinks automaker can hit 15,000 in 2024. Cathie Wood predicts Tesla stock breakout, as if they already haven't been breaking out somehow. Just ridiculous titles like this. I think it's interesting to go back and see what CNBC was saying a year ago. They were really, bearish or neutral on Tesla, and now they've just been pumping it non-stop. So I think that's a good example of, you can kind of see the corruption that, these different finance media companies have gotten into of, they clearly have an agenda to pump this stock up as much as possible now. Morgan Stanley was very bearish until last fall, then they put a $2,000 price target on it recently. So it's clearly just a media-induced kind of pump right now. Recently on CNBC, Wood said that the worst case scenario at the end of 2024 is 7,000. And she also said that that is weighing in probabilities, including bankruptcy. The probability of seeing it hit 7,000 in the next 4 years is very high, according to Cathie Wood. They are not even including autonomy in this $7,000 calculation. So the worst case would be a market cap of 1.3 trillion. This is insane. The best case, she's saying, would be a market cap of 2.6 trillion, or 15,000 per share, which would make it the world's most valuable company if it were today. So Cathie Wood also cites several sources for this increase. The first argument she gives is Tesla's market share has increased competitive advantage over competitors. For example, they keep growing their advantage, or their share of the pie in the EV market, basically. She also says that battery cost is 3 to 4 years ahead. Other car makers have a lose-lose situation. They are killing their own internal combustion engine cars, and they're potentially losing money on the EVs that they need to sell. She says that their China, Berlin, and Texas factories are all being built or planned, and this is a bullish reason to be in Tesla. The second reason she gives is autonomous capability could come out soon, and according to her, this is where the real surprise with Tesla could be. And the third reason is Tesla is riding convergence of 3 major innovation areas: AI, battery, and autonomy. 3 exponential growth trends are converging. To quote Cathie Wood, she says, "We have never seen as much disruptive innovation converging at the same time." So first of all, I'll let you know what I agree on as someone who has looked into Tesla a lot in the past. First of all, I do agree that they have an advantage over other automakers, mostly in battery technology. It's just very hard right now to get the cost of production of batteries to the level that Tesla has it. They've been manufacturing batteries much longer than any of these other car companies have. So that is an advantage they have. I also agree that their uniquely designed autonomous driving computer chip is far ahead of NVIDIA's technology right now. I definitely would agree that they have an advantage with that. When I looked into Tesla 1 to 2 years ago, it was clearly undervalued at $200 to $300 per share, so I bought it. However, at $1,400 a share, that's way overvalued in my opinion. It's kind of the opposite extreme. I would also agree that, other automakers don't really have an incentive to get into EV markets right now because they are in a lose-lose situation. They'll need to stop producing their profitable internal combustion engine cars, and they will need to transition to potentially unprofitable models of electric vehicles. However, I disagree with her in that Tesla is unbeatable at this point. I mean, I think there's a lot of automakers such as a Ford or a Toyota or a Honda that really have the cash and the R&D capital that they could really catch up to them quicker than most people think. I also think that a startup like Nvidia that has the backing of Amazon and just a lot of capital right there from Amazon and Jeff Bezos, I think Rivian could be a serious competitor to Tesla in a few years as well, just because of the immense capital that they have behind them. So there are some issues with what Cathie is saying that I will point out. First of all, as is usually the case with Elon, autonomous driving has been very delayed, even though he promised it would be coming out around the middle of 2020. At the Autonomy Investor Day, which was, I think, around a year ago in June or May or something like that, he said that by the middle of 2020, drivers will not have to pay attention when the car is driving itself. He then specified it would be level 5 autonomy in these cars by the middle of 2020, meaning that these cars, autopilot would be able to handle any situation. And currently Tesla's most advanced autopilot is level 2, so I think this is a really big promise. Obviously Elon has never been able to keep his promises of especially time execution before. However, I think this is a really bad move on his part, because already Tesla has had a lot of lawsuits because of their level 2 autopilot, which has caused several fatal accidents because of misunderstanding or drivers not knowing what this means. So in my opinion, this was not a wise thing for Elon to promise, because say they do have a glitch, and probability would say that they would have a glitch in their system, that their cars would encounter a situation that they had no machine learning of. Tesla would definitely be liable in this situation if it resulted in fatalities or property damage. Elon himself has even said that in such a situation Tesla would be liable in this accident. So in my opinion, this is a very bad position for him to put expectations with the company. Secondly, even if Tesla is capable of perfect autonomy, this does not mean it would be legal on the streets. There could be a big disconnect between technology and legality. Definitely for the cars driving themselves around as Musk promised, I think that's a long ways off for, where you'll be able to just let your car drive around like a self-driving Uber. I think getting the legislation around that could be, potentially decades away. Again, this could have the potential for autonomous cars to be slowed way down if Tesla just launches it before any kind of approval. I think a good thing to compare this to would be kind of like assuming your parents would be fine with you throwing a party at their house while they are gone for the weekend and then asking them for leniency when they return. It's just generally not a good idea. Secondly, let's take a look at Tesla's production numbers, which Cathie points to as exponential. And while 2018 could definitely be called that, since then we've not grown much, and we've actually decreased in 2020 so far. This is a really bad sign. Because even with the recent completion of Tesla's factory in Shanghai, their worldwide production has flatlined and fallen since late 2018. Clearly the demand for their cars has fallen in 2020 due to COVID, and there's simply no other explanation for falling production, because they have an entirely new factory in Shanghai, and they just completed that. Their Fremont factory is still functioning as it was, and yet demand for their cars has fallen. So I take that as not a good sign, especially looking at 2019. There wasn't a serious pandemic in 2019, and yet their sales were not up significantly. So I would take that to be a really bad sign. Another fundamental thing Wood is ignoring is the potential change of the macroeconomic world. A fundamental rule of investing is that macro trumps micro. What happens to the entire world is definitely more important than what is going on within a single company. I think everyone would agree with that. And Tesla is currently planning to build 2 more factories in Texas and Berlin, which is putting more debt on their balance sheet. And at a time when demand could potentially fall even further, this is not a good sign in my opinion. As I've explained previously, Tesla is a luxury product, no different from a Louis Vuitton or Wynn Resorts or cruise line. During a deep recession or depressionary environment, people are not buying new cars, much less expensive and hard to repair cars. Believe me, I think their cars are cool and I would like to own one at some point, especially the Cybertruck, but people would not be buying them during a depression or severe recession. If anything, people would be dumping cheap used Teslas on the market. So is Wood's prediction potentially correct? I'll say maybe. I'll give it a maybe, but only if we recover completely from the COVID shutdowns, which, as I have discussed before, is unheard of and practically impossible. You just don't go from a real unemployment rate of 15 to 20% down to what we were before at 3.5%. In fact, I think the unemployment benefits have encouraged just the opposite of people not working, since in many cases people have been earning more off of unemployment than they were at their job. So bottom line, I just think Tesla is much too risky. Right now it's way overpriced in my opinion. Maybe if we could go back and undo the effects of COVID, this might all play out as Cathie Wood is saying, but it will definitely not happen in my opinion. I think it's just a much too risky investment for me at this point in time. But if you like these kinds of topics, please just consider subscribing, and I hope to see you again.